Hello, Cleveland, and everyone from everywhere else. Excuse me. Welcome to your 10-minute TA for the day. Is it going to be a dead cat bounce? Or is this the bottom that we've been looking for? Let's dive into the charts and find out. All right, so since yesterday we were looking at this double bottom that failed. However, we're now looking at what kind of looks like it could be forming a head and shoulders, an inverted head and shoulders. That is, if price action comes back down here, stays over 82, you could form a head and shoulders there. The measured move of a head and shoulders pattern is from the tip of the head to the shoulder line, and then from the shoulder line. If that head and shoulders plays out, we could see a move as high up as $91,500. That would be great. That would put us right on the 200 moving average here on the 90-minute chart. And yeah, at that point, we would either get rejected by it or we break back over it and we say, hey, thank goodness, that was scary. But anyway, yeah. So we did see that bear flag that we drew out yesterday. Did see the measured move of it play out, not quite down to the measured move, but it did get down into the $78,000 range. So has come up from there now and back into what would be this pattern here, I guess. This still is a bear flag, maybe, kind of, sort of. I mean, more like this now. And this would have to, we'll keep that one there just as a top of the channel marker, but flag kind of looks more like this now. And it would look like we're coming out of the channel there, breaking out over it. That's good. This trend line, this descending trend line that was giving us a little bit of trouble here and here and here, well, it's been broken. So now we can see maybe a little move under it, back to 82, forming this head and shoulders, this inverted head and shoulders, and then maybe a move back up. If we can break over this 85 level, that'd be great, because we are finding a little bit of trouble here from the 50 moving average as well as that 85 resistance level. We are seeing the stochastics. Let me talk about this bullish div here. Yeah. So this bullish div is still there. However, I did notice that there's also a bearish div. So this same trend line, this lower trend line there, couple that with these higher highs here. So we're seeing higher highs on the RSI, but lower highs on price action. That's a hidden bearish div. Now, if we can see price action get up over 87, this 87 level, and put in a higher high, well, that would invalidate the bearish div, but the bullish div would still be there. So let's hope that we see some higher highs here. RSI continue to move up, and it's moving up, it's gaining strength. That's a good thing to see. It's well over its signal line into this bullish zone over 50. The stochastics are in overbought territory. However, they could get stuck here for a little bit, like they do sometimes. Now, hopefully, instead of getting sideways movement like we did here when it got stuck, we would see some upwards movement while it got stuck. Can you see any other upwards movement while it's stuck? Let's look here. Let's make this a little bigger and look back. When's the last time it got stuck? It got stuck here. Do we see some sideways? Just sideways. What about here? Also sideways, but the Bollinger Bands were super tight there. Can we find somewhere where the Bollinger Bands were not as tight? What about here? Here we go. Here's some stuckage. Started here and then moved up. Continued moving up. Anyway, 87 is the key level here. We want to see 87 get broken If price can get over 87, form that higher high, then we cancel out that bearish div. And then we still have that bullish div. And then hopefully this what do you call it? Oh, hey, we broke over 85. That's awesome. Maybe not even going to see this dip back down. Perhaps we'll just see the move up. Hopefully. But yeah, price action did break over the 21 moving average. That's this thick red line there. So usually when that happens, we'll see price action move to the 200, the purple line here. Well, I can show you some other times when that's happened. Let's move back here. So price action broke up over, came up to the 200. Where else? Let's see. Okay, here, price action broke over the 21, came back to the 200. Let's keep looking. Yeah, we're a bit tight there. Okay, here. Broke under the 21, came down to the 200, broke under the 200. Came back up, bounced off the 21. Came back up, broke through the 21, and came up to the 200. We can keep going. Let's see. Here. Came up, came back down, through the 21, almost to the 200. It's not perfect, but it's there. Here we go. Through the 21 to the 200. Anyway. All right. So that's the 90-minute chart. Let's see what we can see on the 6-hour chart. Not quite as much going on here on the 6-hour chart. We did come down lower than the measured move of that bear flag, this bigger bear flag that we had. We're going to delete the bear flag now because we're kind of out of that pattern completely. We went down even further than that measured move. That is a shame. Still pretty far from the 21 here on the 6-hour chart, so a move back up to the 21 may actually occur. That's hanging out here around 88,000. That would give us that higher high that we want to see on the 90-minute chart as well. But yeah, so if we can see, us getting up to the 21, that's what we want to see. But if we see sideways movement here, then we might see a bear flag forming. Now, if we see this bear flag forming, well, the drop would be catastrophic. Let's just draw it. Catastrophic. It would bring us down to about $65,000. And at that point, invalidate the bull flag on this on the daily chart here. And at that point, we'd be well under the 200. And at that point, we'd have to really consider that maybe this was the full bull run. Anyway, hopefully that doesn't happen. Hopefully not. Hopefully we see some upwards movement invalidating this bear flag. Where would it be invalidated? Somewhere up here around 92. It would be the, take a reverse Fibonacci retracement. Oops, did it the wrong way. Here, do it one more time. You go from the top to the bottom. Top to the bottom. So yeah, over the 786, kind of up here, actually closer to 93. You can see 93, or even this, more importantly, this major support or resistance now of 94, breaking and flipping. Then hey, yeah, we are, on our way, or we would invalidate that bear flag. We'd also be over the 21 and on our way to the 200 moving average here on the 6-hour chart, which is around 98 now, but it would be around probably a bit lower at that point, maybe around 96 at that point by the time we got up there. All right, let's see what else. It could also end up looking like the summer of 2021, and it could go sideways a little bit and not drop. Like the bear flag can form, but it could not drop. It could end up looking like the summer of 2021. Let me show you what I mean. I mean here, when we saw this big drop in, what was it, May? Yeah, in May. So we saw a big drop in May from up here around 58, 59, and we dropped all the way down to around 29. We'll just say 30. Dropped down to 29. And then we kind of just went sideways for how long? From May 19th to July 21st. That's June, July, 2 months. So 2 months of sideways movements. And then we saw some more upside, an upswing. Now, maybe we won't get as high, up like this, like we saw in 2021, another all-time high. Perhaps we would just see like a big, nice bounce up. But who knows? Not me. But yeah, that would be what it could look like with the sideways movement. We can kind of see starting here on the 6-hour chart. All right, so on the daily, let's take a quick peek here at the daily. I know the music's gone. I'm going over my time limit, so we'll be quick now. We did fall through the VRVP, the gap. I was talking to you about it here, closer to 85, and you can see there was this gap. We fell all the way through it and into the golden pocket Fibonacci retracement here on the daily. So let's see if we get that retracement from there. We can adjust this bull flag just a little bit more. We'll include the wick, max pain. So now our measured move is down at 116. It would just be a little bit higher than our all-time high currently, if we did bounce back up that high. I don't know if we will. We could. I think we'll see a bounce back. The question is how high. Can we break back up into the mid-high 90s and over? Can we break over to 100 again? Maybe. I don't know. I'm just looking at the charts, same as you. And currently, on the daily, I'm just seeing oversold RSI and oversold stochastic RSI. And whenever we're oversold like this, a reversal is likely to come. I mean, let's take a look back, shall we? All right, oversold here and reversed, and oversold here and reversed. Bigly, oversold here and reversed. Oversold here. Oh, well, I'm looking at the Stokes. Sorry. RSI oversold. Let's look at RSI oversold. A little bit here, reversed. Way down here. Let's see. Here it didn't reverse. Here it actually just went sideways. When was this? This was back in August of 2023, back in at $25,000. Yeah. Let's see, where else? Got real oversold here. Where is that? Is that near the bottom? Over here. Yeah. Near the bottom. Came back up, but then it came back down at that point. So in the bear market, it comes up afterwards, but it usually comes down. But right now we're still over the 200. So we're still technically in a bull. We did come under the daily 200 here in the summer. So we can expect more pain. More pain is likely right now. More pain is not off the table right now. Okay, let's take a quick look at the indicators and then I'll say goodbye. All right, if the 90-minute Stoch can stay up here, get stuck in overbought territory, then we could see some further upside. But if it oscillates down, if it oscillates back down and finds a bottom anywhere and starts curling back up before this like 82 level can, be broken, if this 82 level can hold while its oscillation comes down and under, and RSI can stay in bullish territory, well, then perhaps this, this inverted head and shoulders will play out and bring price action back up into the 90s. Maybe. I mean, we have some major resistances, 89.8. We got 85 right hitting us right now. We got some major resistance on the way, but it's possible. It's possible. Is it likely? Maybe. I mean, we did just see this massive wick on the daily down. Look at how quickly it came back up. Look, it's already started V-shaping here. That's why we got this head and shoulders pattern here. It's possible. It's possible. Let's see what happens. Anyway, if that does happen, then we could see the Stokes here staying up while either the 90-minute either runs down and back up or just gets stuck up here. Then we'll see the Stokes here on the 6-hour chart getting stuck up here in overbought territory as well. And hopefully, and not hopefully, but then we'd see the RSI getting up over into the 50, driving price action up, and pulling the daily RSI and Stokes out of these overbought or oversold territories. So there is a chance for a bounce here, but will it be a dead cat bounce? If we can't get up and over that 92, 91, 5 level, if we can't get over this 94 level, then then we're not putting in any higher highs on these higher time frames. And in that point, we're putting in a lower high. And then we're just continuing this trend to the downside. If that lower high comes, let me get rid of this VRVP. Where are you? There you are. Let me get rid of you. You're just in my way now. But yeah, if that comes, if a lower high comes, then this trend is just continuing to the downside. So yeah, let's watch and see what happens. Thank you guys so much for watching. Music was provided by Luminous, Philoa, and Sax Squatch. You're awesome. Much love. See you later.